to the black economy. A year later, was it all worth it? Watch the demonetization experiment on the 8th of November with Ira Duggal, only on Bloomberg Quint.
Good morning, I'm Alex Matthew and you're watching Daybreak on Bloomberg Quint Live. Here are the headlines. Asian markets take a breather after a record rally, and so do metal and crude prices. US President Donald Trump softens his stance on North Korea, invites Kim Jong-un for dialogue in South Korea. Sun Pharma subsidiary Taro posts a good set of numbers in the second quarter but warns of pricing pressure and increased competition. And the government puts up a spirited defense of demonetization on its first anniversary. The opposition says it was a reckless step which yielded no results. Turning first to the global equity markets now. US equities ended mixed on Tuesday. However, the dollar gained as investors shifted focus on fiscal policy. Later this week, we'll obviously get a little more clarity on the tax plan that the government has. Now, Julie Hyman has the entire report on the trading session.
U.S. stocks finished little changed when all was said and done, although the Dow did rise slightly, enough to make it a new closing record for that index. Investors continuing to watch the progress of tax reform in Washington. So with that ongoing, we have not seen much movement in stocks amidst that. We did see a decline in Treasury yields, the 10-year yield in particular, sliding for the fifth straight session. That seemed in turn to put pressure on financials. That group was the worst performing sector in the S&P 500. On the flip side, another group that tends to be sensitive to bond yields in the other direction, utilities, were the best performing sector. And speaking of best and worst performers, there were some notable ones within the S&P 500 on an individual basis. GGP, which is a mall owner in the United States, Bloomberg News reporting that Brookfield Asset Management is in preliminary talks to buy the rest of GGP that it doesn't already own. GGP finishing up by 17% in reaction. That according to people familiar with the situation. And again, Bloomberg's reporting. Now on the downside, the worst two performing stocks in the S&P 500 were online travel companies Priceline and TripAdvisor, both of them tumbling after coming out with outlooks that disappointed investors, raising concerns about slowing growth within that industry. Julie Hyman, Bloomberg, New York.
Now, US President Donald Trump has abandoned his plan to visit the demilitarized zone on the border between North Korea and South Korea today. Heavy fog made it difficult for his helicopter to land. Trump, who earlier held bilateral talks with South Korean President Moon Jae-in, also softened his stance on the Kim Jong-un regime, inviting the dictator for a discussion on the recent standoff. Stephen Englis, who is in Seoul, joins us now with the latest. Stephen, what's the president's plan today?
He's not going to the DMZ. What he's going to do is going to come here later. Behind me is the National Assembly, the Parliament building of South Korea. He will give a speech in the 11 o'clock hour local time. And the big question is, will he stick to script like he did last night in the press conference with Moon Jae-in, the president of South Korea, where he really solidified the partnership with the South Koreans and talked at great length about the partnership and that they are in agreement on how to handle North Korea, and even opened up the door for dialogue, said, come on down, Kim Jong-un. Well, not come on down. Come to the table, we should say, and let's make a deal. The other big question is, you know, what will North Korea do? They've been fairly silent over the last couple of days as Donald Trump has been here on the Korean Peninsula. Now, it's a bit of a break from tradition for Donald Trump not to go to the DMZ. I was just doing some research on past presidents. Ronald Reagan went in 1983, Bill Clinton in 93, George W. Bush in 2002, and the last U.S. president to go to the DMZ and Panmunjom was Barack Obama in 2012. So that string, now 5 years of no president going to the DMZ, is going to continue.
Stephen Engel there with all those reports. He'll be back later to give you more. But let's now look at the Asian markets. The Asian markets have opened weaker All three early risers have opened in the red, with the Japanese Nikkei losing the most ground. In fact, it has regained some ground. It was down as much as 0.6% in early trade. It is now just about 0.4% down. But let's turn to the Indian market now, and Darshan Mehta and Agam Vakil are here to set us up for the day's trade and to tell us what's happening in the futures and options space. Morning, guys. First to you, Darshan. What are you seeing that will happen today?
See, at this point of time, Alex, it looks like it will be a weak opening because the SGX Nifty is indicating a negative opening. It's down almost 11 points. It has recovered from, it was down almost 22 points at one point of time. It's recovered, but it will be a muted start. Still there is almost 2 hours to go for trade. So the SGX Nifty. Now the ADRs saw a lot of sell-off that came in. The Nifty itself was down 100 points yesterday. So surprisingly, Tata Motors was down almost 5%. The ICICI Bank was down another 3.5%. Dr. Reddy's was down 2%. Infosys was the only ADR that pretty much ended with a positive bias. Now let's look at crude. Crude again surged 3.5% overnight, so it's on fire. Brent is above almost 63.7 now, and WTI is trading above the $57 barrel per mark. So significant amount of strength is seen on the crude. Base metals was very weak. Weak closing by base metals on the LME. Most of the base metals were down almost 2%. So copper, zinc and nickel were down 2%. Aluminium was close to 2%, but it was down in trade. As far as COMEX copper is concerned, it started trade with a positive bias. Even in Shanghai, the opening is very, very weak for base metals. You just look at what's happening. Copper is down 2%, aluminium is down 1.5%, steel and rubber are down almost 0.8%. So metals across the board is weak. Gold is trading muted, but yesterday on overnight trade, it dropped close to 0.5%. As far as fund flows are concerned, aggressive selling by DIs. FI has bought in almost 461 crores in the cash market. But look at the sell figure, almost 2,000 crores of net selling by DIs in the cash market. Obviously, a lot of bulk deals did happen. So that is something you have to watch out for. So in the month, FIs have bought in almost 3,766 crores. But look at the selling by DIs, 3,400 crores of selling. So it's the exact opposite of what was happening in last month. What were the sectors that did well? IT was one of the best performing indices in trade yesterday. But pharma saw the big selling that came in, and PSU banks again saw selling, and pharma had news of its own in terms of Lupin that dragged the entire index down. What contributed positively? Infosys ended positive, the ADR. So IT as a pack did well. So Infosys, TCS, HCL did well. What didn't do well was banks and financial institutions and oil and pharma. Obviously, Lupin contributed 11 points, was down 17%. But that's the overall score. We're down almost a century on the Nifty. But Agam, what's the FNOQ like?
Well, Lupin will clearly figure on my list, Darshan, and we saw the Nifty also come out by as much as 100 points. So clearly there was a lot of selling pressure as far as yesterday's day of trade was concerned. We saw a lot of unwinding of positions being taken earlier, so longs unwinding as far as the Nifty futures is concerned. Coming to the Nifty bank as well, we're looking at unwinding over 1.5%, so weakness there as well. We were watching out for that mark of 12. We saw it move above the mark of 13 as far as the India volatility index is concerned, and that's exactly what happened. We saw weakness, and along with that, the VIX moving up about the mark of 13. And with that, considering the fact that Nifty moved down further, we saw the Nifty put call ratio also moved down to around 1.43. Still at elevated levels, I should say, in comparison to the average over the last few months. But when it comes to the changes in open interest, naturally, considering we saw the Nifty downwards, we saw more writing in the 10,500 cores and the 10,600 cores. 10,600 is the one which is looking at substantial accumulation over not just yesterday, but over the past 4 or 5 sessions. But in terms of stocks, do remember we are keeping an eye on India Cements, which has moved back into the F&O band. So that will be in focus. And of course, Lupin, which has had a terrible day yesterday. We saw 34% increase in open interest towards fresh shorts. So concerns building up there. And Oracle Financial, where we are looking at a little bit of an issue here, but we have seen an increase towards fresh longs as far as Oracle Financial is concerned. However, Alex, all eyes will be on the pharmaceutical space because there was a lot of weakness there yesterday.
Yes, and a lot of news that came in over the course of yesterday and today. But let's take a check on the rupee and the bond market now. Saloni Dhanuka joins us on the show. Saloni, what do you have for us?
So, well, Alex, it was quite a volatile session for rupee yesterday. It opened at 65.64 levels against the US dollar in the opening trade. However, it ended sharply lower by 38 paise and ended at 65.03 levels against the dollar. Now, a fall in the domestic market along with rising dollar demand on the back of rising crude oil prices pressurized the rupee. Now, the home currency has depreciated approximately by 50 paise in the past two trading sessions. On the global front, dollar index ended higher yesterday at 94.91 levels on the back of strong labor market data. However, it is now trading 0.1% lower ahead of the release of Chinese trade balance data today. Coming back home, dollar rupee is trading at 65.17 levels against the dollar in the non-deliverable forward market. Now, it indicates a weaker opening for Indian rupee in today's trade. Moving to bond market, the 10-year benchmark yield ended 4 basis points higher at 6.92%, its highest close in over 6 months. And finally, global funds reduced their rupee debt holdings for the second consecutive session yesterday. They reduced their holdings by approximately 470 crores according to NSDL data, Alex.
Thanks, Aloni. Now, Union Finance Minister Arun Jaitley and former Prime Minister Manmohan Singh clashed on Tuesday on the eve of the first anniversary of demonetisation. First, it was former Prime Minister Manmohan Singh who reiterated the organised loot and legalised plunder remark that he had made in Parliament. This time, he made it in poll-bound Gujarat. Singh also called demonetisation a reckless step which did not achieve any of its objectives. Finance Minister Arun Jaitley responded later, saying demonetisation was an ethical drive and a moral step that made corruption difficult. He specifically responded to former Prime Minister's loot remarks, saying that the 2G scam, the Commonwealth scam and the coal scam were all loot, while an anti-black money drive is a moral step. Listen in.
निश्चित ही ये एक वाटरशेड मूवमेंट जिसे कहते हैं भारतीय अर्थव्यवस्था के लिए था। कोई डिमोनेटाइजेशन वन ऑफ सॉल्यूशन है कि इससे सारा समस्या हल हो जाएगी, ऐसा नहीं है। लेकिन इसने एक एजेंडा बदला और उस बदले एजेंडा में लेस कैश इकोनॉमी की तरफ हम जाएं। An anti-black money step is a moral step. What is morally and ethically correct has to be politically correct. लूट तो वो होती है जो 2G में हुई, जो कॉमनवेल्थ गेम्स के कॉन्ट्रैक्ट्स में हुई, जो कोल ब्लॉक के एलोकेशंस में हुई।
Tomorrow will mark exactly 1 year since the disastrous policy of demonetization was thrust on the people of our country. I say it with immense pain and a sense of deep responsibility that the 8th of November was a black day for our economy and indeed for our democracy. I repeat, as I stated in Parliament, this was organized loot and legalized plunder. None of the lessons from this monumental blunder have been learned by the Modi government.
Now, the government's push for digital transactions has generated a lot of buzz over the last year after demonetization. Charlene D'Souza now finds out if the digital push has worked for smaller retailers.
It's been a year since demonetization. In the initial months, digital transactions were on the rise due to a cash crunch in the system. Now that liquidity is back in the system, Confederation of All India Traders say that customers now are opting to pay by cash. I'm right now at Dada's retail market. Let's see retailers here offer digital option as a payment.
अभी मतलब कार्ड का ऑप्शन भी देते हैं पब्लिक, तो वो हिसाब से अभी हो रहा है रिस्पॉन्स, अच्छा है, रिस्पॉन्स आ रहा है कार्ड में भी। अभी फिलहाल 20% तक है, मतलब अभी आगे बढ़ने की संभावना है।
I would say 20 to 30% people are using cards. Now most of the people are having saving bank account card, so they're using that.
The Confederation of All India Traders says that in the initial months, due to a liquidity crunch, the rise in digital payments was as high as 50%, as merchants and customers didn't have a choice. Prior to demonetization, the use of debit and credit cards was as low as 2 to 3%. However, currently, the usage of digital payments in urban India stands at 20%, while in rural India, 5 to 7% of transactions at smaller retailers are done either through debit or credit cards.
कार्ड के लिए अभी ज़्यादा पूछते हैं, पहले नहीं पूछते थे, अब ज़्यादा पूछने लगे। पहले समझो 50 कार्ड पे था, 50 कैश पे था, अभी 80 कार्ड पे आ गया, 20 कैश पे आ गया। अभी 30% बढ़ गए हैं कार्ड वाले, कैश वाले कम हुए।
पहले तो 60-40 था, अभी 80% उसका हो गया है पूरा। पहले जो ग्राहकी था वो थोड़ा कम हो गया है इसका, थोड़ा
कैश के पेमेंट वाले
कैश के लिए ऐसा। और अभी पे अपना क्रेडिट कार्ड से तो अच्छा ग्राहक है, पे अपना हो रहा है, ग्राहकी अपना पेमेंट अच्छा आ रहा है उससे। पेटीएम से तो बहुत कम हो, इतना हमारे इधर तो नहीं है।
Yeah, we do offer card payment options, but there is a little bit of rise in digital payments. Roughly around 20%. We started after post demonetization.
As liquidity has increased in the system and since an additional cost is levied on the usage of credit and debit cards, merchants have also started to push for customers to pay in cash.
Retailers at Dadar market say that they have witnessed a rise in digital transactions post-demonetization. Some retailers say that they have seen a rise of up to 80% in digital transactions. This is Charlene D'Souza for Bloomberg Quint.
Meanwhile, Harvard professor of economics Kenneth Rogoff has told Bloomberg Quint that Indians averted the impact of demonetization in creative ways. The damage, he told Ira Duggal, was not as much as feared. Listen in.
Obviously, I was quite surprised. I didn't have any word that this was going to happen. My own plan for reducing the use of cash involves doing it very slowly and not to seize the currency out there, but just to make it more difficult to use cash to do large-scale transactions. I think that can be achieved. The trouble with doing a surprise attack, as India did, is the collateral damage is so much that you can't really squeeze out the black money. You can't, you don't have the time, you don't have the people to try to sort through everything. But I must say, a year later, it's been a bigger political success than I might have imagined. And if the Prime Minister continues to capitalize on that to try to root out corruption, to try to make the Indian economy more efficient, it could end up being judged a success.
Professor Rogoff, as an economist, can you sort of explain to us how this process works through the economy? You have a sudden shock which takes away a large amount of your cash in a cash-driven or a high-cash economy like India. Typically, how would you have expected it to play out through the economy, sir?
Well, you would expect that it would hit economic activity because India, although it's moving towards more credit and it's taken some very important steps that the rest of the world hasn't in financial inclusion, in giving ordinary people debit accounts, it's not there yet. So you'd expect economic activity, particularly in the informal economy, to contract a lot. As in the event, the Indian people seem to have been incredibly creative. In fact, it reminds me somewhat of when a similar event happened in the United States in the Great Depression. Franklin Roosevelt, the new president, closed the banks when he was elected in the early 30s. And people didn't have access to cash. They didn't have access to their checking accounts. And yet the Americans, too, were very creative back then in continuing to do their business. The Indian change was even more dramatic in some ways. And it's really a surprise the damage wasn't much more.
Well, you can catch that entire interview on the website bloombergquint.com. But moving on, demonetization has propelled mobile payment applications 5 to 6 years ahead. That's a word coming in from Vineet Singh, who is the Chief Business Officer of mobile wallet MobiKwik. Listen in.
I think the numbers are humongous. The traction has been huge. The number of people, first-time users who have flavored digital payments okay, has been a humongous kind of a number. It has, I think, added companies like us 5-6 years impetus through one act of or through one event of demonetization. So yes, I think the numbers speak for themselves, and it has been a very, very positive move. And now everybody across the world in the payments ecosystem is looking at India, and the Indian payments business, or the, you can say, digital transaction economy, is a huge opportunity, and a significant amount of investment is also being made in this sector.
Now, pharma stocks will be in focus today after Sun Pharma's subsidiary Taro came out with better than expected numbers in the second quarter, while Lupin held a con call last evening after the US pharma watchdog issued a warning letter on 2 of its plants. Darshan's back to tell us more about both. Darshan, let's start with Taro. The company did well, but it did talk about intense competition though.
See, that is right. The numbers on a year-on-year basis are down because of intense competition. Because if you're looking at the top line, that was down 26%, but it's come in higher than what the street was anticipating. So there was just one Credit Suisse report that had their estimates on it. So as far as the net sales was concerned, it's come in at $170 million compared to an estimate of $158 million. Even profit beat by almost $10 million. Margins coming in at 52% versus 49% that Credit Suisse had anticipated. Now, what is Taro saying? That they are seeing continued increased competition and issues as far as pricing trend is concerned. The challenging pricing environment will remain, but they saw an increase as far as volumes were concerned. The R&D spends increased significantly. The net income was impacted by a forex loss of $46 million. So despite that, they've come out, this includes, despite a forex loss, the numbers are much better than what the street was anticipated. No doubt the tax rate is much lower this time around. It's 11% versus 22%, and they have sizable amount of cash on their books. So despite over the past few quarters where Taro has been disappointing, it's a strong set of numbers by Taro. They contribute almost 25% to Sun Pharma's top line. So Sun Pharma will be in focus. Now coming to Lupin, the conference call was there. The news came out during market hours, but the conference was there after market hours. They have indeed specified, because they have the access to the warning letter, it was not uploaded yet. So what they say is that, from their reading of the warning letter, they don't see any kind of data integrity issues that are there. The US FDA has pointed out to two instances across both plants where there are issues and they were not satisfied with the responses. First of all, it was the out of specification responses, and secondly was the hold time studies. So they are common points across both the plants. They're saying that the US FDA wants to conduct the hold time studies from a retrospective effect, for the past few years. So Lupin will get back to the US FDA to get a sense of what they want to do. But as far as products are concerned, around 50 products will be, there are around 50 product approvals pending from both the plants. Close to 25 to 30 products will be affected by warning letter, and close to 12 is something that Lupin believes will be shifted to other plants so that there can be seamless approvals that can come in. There are no issues as far as the other indoor plants are concerned. It's only Indore Unit 2, Unit 1 and Unit 3 are separate, so they don't see any kind of issues there, and they did not comment on what was the total sales that both these plants combined get in, but the street anticipated it will be close to anywhere between 30 to 40%.
Thanks so much for that, Darshan. Now, moving on, higher commercial vehicle prices and lower discounts are expected to help Ashok Leyland post a good set of numbers in the second quarter, but rising raw material prices may weigh on margins. Here's Yatin Mota with the key numbers to expect from the Chennai-based truck maker.
We are expecting a healthy second quarter for Ashok Leyland, and remember, in the second quarter the company posted a total sales volume growth of 23%, and that will be clearly driving the top line growth along with the realization growth, which is expected to be close to 8 to 10%. So we are expecting almost a 33% increase in the revenues for Ashok Leyland. Of course, this time because of commodity cost pressures, we could see some decline in the absolute EBITDA and the EBITDA margins. But if you look at the profits, we are again expecting them to rise close to 30 to 33% to come in close to 385 crores. Margins will see a decline of nearly 50 basis points on a year-on-year basis to come in at close to 11%. Of course, apart from the earnings, the key factors to watch out for in Ashok Leyland will be the management commentary on the domestic CV cycle and demand moving forward, especially in the second half. How do they see the M&A and CV segment perform, and also the kind of export market pickup that they see moving forward. So on an overall basis for Ashok Leyland, apart from the management commentary, we'll watch out for the margin picture, which is expected to be close to 11% for the quarter.
Now, Shraddha Babla has all the stocks in news that you have to look forward to. Shraddha, over to you.
Well, to start off with, the Qatar fund is going to be selling up to 5% stake in Bharti Airtel at the price of 473 to 480. That's a huge 7% discount to yesterday's closing price, so it could be taken as a negative for the stock. You also have an ET report which says that PE majors are vying for up to 13% stake in Aditya Birla Retail. That's the hypermarkets and supermarkets arm of the Aditya Birla Group. You have Axis Bank, which has said that their board will meet on 10th November to consider fundraising. Now, remember, last week newspapers had said that Bain Capital is interested in buying some stake in the company, so keep an eye out for that name. JSW Energy, they've received an order to supply 200 megawatt power to Karnataka from November 8th to May 31st. You also have AdLabs Entertainment, which will sell Novotel Imagica, the Khopoli-based hotel, for 213 crores, and they will also sell Walkwater stake to another company for about 150 crores. So effectively, they are looking to reduce debt by about 350 crores. So we could see some positive reaction there. Axo Nobel, the paints company, is also looking to divest its India specialty chemicals business, and they're looking to garner about 320 crores from that. You have Delta Corp, which will be in focus on the back of a bulk deal where Rekha Rakesh Jhunjhunwala sold 0.9% stake in the company yesterday. Now remember, as of 30th September, Rekha and Rakesh Jhunjhunwala together held about 8.43% in Delta Corp. So all of these stocks to watch out for, Alex.
Thanks so much for that, Shraddha. And there are a couple of big brokerage calls that you need to know about. Somit Sarkar has all those details. Somit?
So on the brokerages, first we have is Morgan Stanley on bank. Now, since the recap announcement, Axis Bank, ICICI Bank and SBI Bank have run up in the range of 17 to 20%. But opposed this run up, Morgan Stanley still believes that there's further upside to this rally. Now, they have maintained their overweight rating on Axis, ICICI and SBI, but have hiked the target price. For Axis, they have hiked the target price to 630, which suggests a potential upside of more 20%. For ICICI, they have hiked the target price to 365, suggesting a potential upside of 17%. And for SBI, they have hiked the target price to 370, suggesting a potential upside of 17%. Now, according to Morgan Stanley, the risk reward is significantly favorable for investors after this rally also. Now, the bank recap will clean up the books for the large corporate lenders, and post this they can expect some pickup in the pre-provisioning operating profit, and they can also see their net interest margins improving. They are also expecting the return on asset for Axis, ICICI and SBI to improve to 1.5%, 1.5% and 0.9%. And with this recapitalization, they are expecting the stressed asset resolution to accelerate and faster return to the normalized return on equity. Second, we have is Credit Suisse on Cipla. Now, they have maintained the outperform rating, but have hiked the target price to 700 from 600. Now, in the second quarter, they have seen a significant upside coming in from US because of the Renvela launch. The cost control also continued in Cipla because of declining employee cost year on year. Now, they are expecting the second half to be strong for the company, led by strong accruals coming in from Renvela and approvals of couple of other products that are expected to coming in on the back of India business growth. And they are also saying that the inventory days for Cipla would reduce to 4 to 5 days from current 8 to 10 days going forward.
Thanks, Amit. Now, there's lots that you can read on the website bloombergquint.com, but I just want to highlight one of them. Ride-hailing application Ola has announced a global partnership with technology giant Microsoft to build a new age connected vehicle platform for car manufacturers worldwide. This tool will enhance rider experience as well as for predictive maintenance of the cars. But that brings us to the end of this edition of Daybreak. All you need to know is up next. Do stay tuned, and thanks for watching. This is Bloomberg Quint.
Are we live?